U.S. heading towards a severe deflationary recession, per Bloomberg Intelligence. And to start the week off, the SPY is trading at February highs, and it's sitting at the top of the Bollinger Band. And all the while, the VIX is trading at lows we haven't seen since the start of 2022. If we see a slight downturn in the market, this is what's going to finalize the head and shoulders that we're currently creating, leading to a downturn in the market. And you can see here, every time the VIX has tanked, we have gone down. Even if you look at the futures ranges, we are sitting at the top of the range, and we could be heading towards 38.97, which is our trendline median support. With NASDAQ futures also sitting at the top of the channel, this has been prior resistance, looking towards a move back to our median support level, our trend. Even Bitcoin sitting at the top of its channel, being rejected from that $30,000 range. Bringing this up because your trading needs to have underlying fundamentals. The best time to buy is into these dips. Now we're sitting at local highs, and what could happen, we could push above, but what could happen is we drop back to trend before we move a leg up higher. Now, to make the most out of your money that you're putting into these projects or stocks, it's better to buy when we dip. It's better to buy when we find support, we come back to trend before our move back up into highs. The S&P could fall more than 20% between 3,000 and 3,300, warns Mike Wilson, who's Morgan Stanley's chief U.S. equity strategist. So we could be looking at a 20% drawdown. And the way they get these statistics is they go back to historical data. What happened in '08? So this is how the 2008 financial crisis unfolded. This is the historical data that the bankers are looking at when it comes to money allocation. You have trillions of dollars sitting on the sidelines waiting for the big capitulation moment. Now you can see this is not a fast cycle. You went from 2007 being flat through '08 into 2009 before we see this capitulation correction, right? Your V-shaped Nike swoosh recovery. So don't be hasty. You can, if you feel like this is different than 2008, that there's not this underlying financial bubble, feel free to start allocating your money, but just be mindful of the downside and where we could potentially move to. Okay. So what they're saying is you have this bull trap, you have a move up, and everyone thinks, oh, this is over. And then we keep going down. And then you have more bankruptcies. We have our banking crisis, which is happening right now. And then they start lowering their targets for the Fed funds rates, and then you have capitulation. The other thing too is people are already speculating on this happening, and so they're already trying to jump in before your Fed pivots. Okay, so just keep in mind with that. So let's jump over to Bitcoin and what the market looks like. So you can see here, Bitcoin's been rejected off of the $31,000 range. These were our prior resistance zones that we have drawn up. And so we came up here, we're losing a little steam. Your MACD's turning over, volume's going down, and we can't keep it. I think Bitcoin's going to be in my opinion, right, not financial advice, Bitcoin might be the leading indicator because it trades through the weekend. Based off of what Bitcoin is doing, I can assume we're going to see a downturn in the S&P 500 NASDAQ. And I'm going to position myself appropriately for this downturn into the week. Now, we do have a little bit of room based off of Bollinger Band, your deviation lines. We do have a little bit of room for upside potential with the SPY. And so I'm going to be waiting to see, are we going to drive the VIX back up into 18, 19, into the 20s? And is SPY going to drop a leg down to its trend? Remember, based off of mean reversion trading, which is kind of how I like to trade, everything likes to go back to trend. I'll kind of show you real quick what I'm talking about. So pre-market, your SPY is starting to lose a little bit of steam. So white lines are trend. Your red line is your top. I have the Keltner bands also, just to kind of give range. So your brighter lines are the Keltner bands. Your darker lines are the Bollinger bands. Bollinger uses deviation. I'm set for 2 standard deviations. Excuse me. Everything likes to go back to trend, and you can see this. When we're in the red, we come back to trend. We go back to red. I put red as sell, green as buy, and we leave this, and we actually move 2 standard deviations down to the green line. Okay? We have a little bit of consolidation. We travel away from the green line back to trend, and from trend, we go up 2 deviation lines to the top. And you can see we bounce back and forth here, bounce, bounce, bounce. We ride the upper deviation, we hit trend, okay? We come up, we break through trend, we come down to the second deviation line. So this is also based off of my trading style. This is what I've been working on. You can see not only do I use your deviation, it kind of gives you an idea of if we're overbought, oversold, if we're going to go back to trend, and you can see that we've rode the upper deviation. We've had a lot of money being put into the market, and so a little bit more volatility with the money coming into the market makes it a little bit harder for your mean reversion trading, because you can push these upper bands a little bit. Same with Black Swan news. You could actually push these lower bands. And so when you think, oh, it's breaking through these lower bands. Well, with a lot of negative news, you will stay outside that band for a little bit. You have so much volatility that it wants to ride these bands. And so we're not quantitative easing, but they're allowing banks to get loans so they don't default with their bonds. And so what's happening is money's coming into the market, and so you're starting to ride these bands when normally you would kind of come up, come back to trend, come back up. And so what's happening is you're pushing, okay? And this is also coming in a time where your volume's lower than what it was. And you can see people buy in these dips. Look how much more volume you have here, okay, than as we're riding up. So this is people buying. This is also people selling. So people are selling into the dips, and then they're buying these dips, and then we're riding it back up. You can see we hover around trend. We break through trend up to the top deviation. And then we use this at the same time as our normal TA. You have your support, resistance, and just your normal channels. You can see this is our prior top, and then we have a channel here. We actually gapped up, broke it. And so what I'm expecting, the bearish case that I'm expecting is actually us to maybe even gap fill, okay? Our lower Bollinger bands are starting to climb up to this point, but what we could see, and 400 is going to be a psychological number, but what we could see is SPY coming back down to the 400 range, and I would maybe expect that, especially with VIX sitting where it is. So that's my 2 cents on where the market's going, and I could be wrong with the money influx, people starting to buy in. And this is different, in my opinion, than 2008. We don't have this underlying bubble. If banks can stay positioned where they are and you don't have these mass withdrawals that keep happening, this could blow over, and that could have been your bottom, and we could just be making our legs higher. Now, if you're enjoying these videos, give them a like. Go ahead and subscribe to my channel. Follow. We talk about the market, what to expect through the week, how to best position ourselves through these uptrends and downtrends, how to buy in the bottom of your deviation lines in the top, and how everything comes back to your trend. So thank you.